Palantir just received a major announcement. It has huge implications for its price in the near future, and every investor needs to know about it. Welcome back to Fire Stocks, where we talk about tech stocks like Palantir and NVIDIA. Please like this video, leave a comment, and share it with your friends. It'll motivate us to make more of such well-researched videos for you every single day. All right, before we jump into the big news, let's break down what's happening with Palantir's price action, because the numbers right now are telling us a very interesting story. First off, Palantir is trading at $106, down $17 from just 2 days ago. That's a sharp drop, and when you see a price movement like this, you gotta ask, is this just a dip, or are we looking at a bigger shift in trend? Let's look at the indicators. RSI is at 35.7. This is approaching oversold territory. While it's signaling weakness right now, historically, stocks tend to bounce back once they hit oversold levels. So if Palantir keeps sliding and drops below 30, we could see a reversal. MACD is at minus 4.48. This is a bearish crossover, meaning momentum is still shifting downwards. When the MACD goes negative, it usually confirms that sellers are in control and the downtrend could continue before we see any kind of recovery. Moving averages still strong. Here's where it gets interesting. Palantir is still trading well above its key moving averages. The 50-day MA is $84.28, 100-day MA is $67.58, and 200-day MA is $47.49. What does this tell us? Even with this pullback, Palantir's long-term trend is still bullish. If the price drops further, it could test strong support around the 50-day moving average at $84. If that holds, this could be a buying opportunity. So what's the takeaway? This drop is shaking out weak hands, but the big question is this the start of a bigger downtrend or just a healthy correction before another leg up? If Palantir breaks below its 50-day moving average, it could slide even further. But if buyers step in, we could see a rebound from these levels. As I've been reiterating in the previous videos, there are several concerns about its valuation. The stock is trading at approximately 74 times its projected annual sales of $3.75 billion, a multiple that leaves little room for error if growth slows. Analysts such as Deutsche Bank's Brad Zelnick and Mizuho's Greg Moskowitz have expressed caution, setting price targets of $50 and $80, respectively. They advise investors to consider the elevated valuation and potential for slower growth rates in the future. Unusual activity in the options market has been observed, with a significant volume of out-of-the-money put options set to expire soon. This trend suggests that some investors are positioning for potential downward movement or seeking to hedge their positions against possible declines. While Palantir's stock has demonstrated remarkable growth, some forecasts suggest potential volatility ahead. Analysts have indicated that the stock could experience a correction, with possible declines to levels around $60, especially if growth expectations are not met or if market conditions shift unfavorably. Palantir's stock performance this week reflects a company with strong upward momentum but facing scrutiny over its high valuation. Technical indicators present a mixed outlook, and significant options market activity points to potential volatility. Investors should exercise caution, closely monitor market trends, and consider both the company's growth prospects and the broader economic environment when making investment decisions. Now let's talk about the big news. Palantir has recently been recognized as one of 26 perfect stocks, achieving a top-tier composite rating of 99. This rating signifies that Palantir outperforms 99% of all stocks based on a combination of key fundamental and technical metrics. The composite rating is a comprehensive assessment that considers various performance indicators, including revenue growth, earnings stability, profit margins, and stock price performance. Palantir's exceptional rating reflects its strong financial health and market position, particularly highlighted by its 36% revenue growth in the fourth quarter of 2024 and a 75% increase in adjusted earnings compared to the previous year. In addition to its composite rating, Palantir boasts a relative strength rating of 99, indicating superior stock performance relative to the broader market. This metric underscores the company's robust momentum and investor confidence. Palantir's inclusion in this elite group of perfect stocks underscores its strong operational execution and strategic positioning within the technology sector. As the company continues to innovate and expand its offerings, it remains a compelling consideration for investors seeking exposure to high-performing tech stocks. Now, let's move on to investments from the big players. Recently, Congresswoman Marjorie Taylor Greene disclosed significant investments in several major technology companies, including Palantir Technologies, Apple, and Intel. The disclosure, filed late last week, indicates that Greene has diversified her portfolio by acquiring positions in these prominent tech firms. While the exact amounts of the investments were not specified, such moves suggest a strategic interest in the technology sector, which continues to play a pivotal role in the global economy. Investing in companies like Palantir, known for its data analytics platforms, Apple, a leader in consumer electronics, and Intel, a major player in semiconductor manufacturing, reflects confidence in the sustained growth and innovation within the tech industry. These investments align with broader market trends where technology stocks have shown resilience and potential for long-term appreciation. It's important to note that as a member of Congress, Greene is required to disclose financial transactions to ensure transparency and maintain public trust. Such disclosures provide insight into the financial activities of public officials and can influence public perception and investor sentiment. While the disclosure offers a glimpse into Greene's investment choices, it does not provide detailed information on the size or timing of the transactions. Investors and the public may interpret these moves in various ways, but they underscore the ongoing relevance and attractiveness of the technology sector to a diverse range of stakeholders. Now, what's most interesting to me is that institutions hold the largest stake in the company, owning approximately 49% of the shares. This means they stand to gain the most when the stock rises and take the biggest hit if it declines. Institutional investors commonly compare their own returns to the returns of a commonly followed index. So they generally do consider buying larger companies that are included in the relevant benchmark index. Hedge funds have little to no significant investment in Palantir Technologies. The company's largest shareholder is the Vanguard Group, Inc., which holds an 11% stake. The second and third largest shareholders own 6.9% and 4.4% of the outstanding shares, respectively. Notably, Peter Thiel, the third largest shareholder, also serves as the chairman of the board. Institutional investors who chose to buy in when Palantir was at less than $70 are the biggest winners. Institutions are the smartest investors too. They have huge teams dedicated to doing just this, identifying the best stocks they can invest in. And that's it for this video. Please like this video, leave a comment, and share with your friends. It'll motivate us to make more of such well-researched videos for you every single day.